Are you too busy to learn investing but still want to build real wealth? Maybe you're a doctor, an engineer, a programmer, or someone who simply works long hours. You don't have time to analyze charts, watch the news every day, or study individual companies. The good news is, you don't need to. In this video, I'm going to give you the perfect investing plan designed specifically for busy people who want to grow their wealth safely, automatically, and without stress. By the end, you'll know exactly where to invest, how much to invest, and how to keep your money growing with minimal time and effort. Let's begin. Most people think investing is complicated. They believe you need to predict market movements, follow complicated strategies, or spend hours watching financial videos. But that's simply not true. The greatest investors in history built their wealth with simple, repeatable systems, not by guessing the market. The most important principle is this: you do not need to time the market. You simply need time in the market. The sooner you start, the easier wealth becomes. Now, if you're someone with a demanding job, you probably face 3 problems. Number 1, you don't know where to start. Number 2, you're afraid of losing money. Number 3, you don't have time to manage investments daily. These concerns are completely normal. And the solution is to build a plan that works on autopilot. The strategy I'm going to share is simple, safe, and used by millions of successful investors worldwide. It doesn't require advanced knowledge, and you can manage it in less than 20 minutes a month. The foundation of this strategy is something called dollar cost averaging. Dollar cost averaging means investing the same amount of money every month, no matter what the market is doing. When prices are high, you buy fewer shares. When prices are low, you buy more shares. Over time, this lowers your average cost and reduces risk. This approach eliminates emotional decision-making and allows compound growth to work in your favor. Now, where do we put this money? One of the best choices for busy professionals is a broad market index fund. An index fund is a collection of hundreds of companies bundled into one investment. Instead of trying to pick individual winning stocks, you buy a piece of the entire market. The most famous example is the S&P 500 index, which includes the 500 largest companies in the United States. Historically, the S&P 500 has returned about 7 to 10% per year on average over the long term. That means $100 invested monthly can grow into tens of thousands over time. Index funds have 3 major benefits. First, they are diversified. Your investment is spread across many companies. Second, they are low cost, meaning you keep more of your returns. Third, they require no time or skill to manage. If you prefer international exposure, you can also invest in a global index fund that includes companies around the world. This gives you even more diversification. Your next option is ETFs, which are very similar to index funds but trade like stocks. They are easy to buy, low cost, and ideal for long-term investors. Now, here is a complete investment plan you can follow. First, decide how much you can invest consistently each month. Even $100 a month is a great start. Second, choose a broad index fund or ETF, for example, the S&P 500. Third, automate your monthly contribution so the money goes in without you thinking about it. That's it. This simple plan can outperform most professional traders over the long term. Let's look at an example. Imagine you invest $200 every month for 20 years. With an average return of 8%, you would end up with more than $100,000. That is the power of time and consistency. And what if you can invest more? Let's say $500 a month. Over 20 years, that could grow to more than $250,000. All without needing to study the market or pick stocks. Some people prefer adding a small percentage of gold to their portfolio for stability. Gold can protect against inflation and economic uncertainty. A simple way to do this is to allocate 10 to 20% of your investment into a gold ETF. This gives your portfolio balance and reduces volatility. Another important tip: avoid checking your investments too often. The more you watch the market, the more emotional you become. Short-term declines are normal and happen all the time, but the long-term trend is up. Remember this. Your job is not to predict the market. Your job is to keep investing consistently. You might be wondering about individual stocks. There's nothing wrong with investing in individual companies if you enjoy researching them. But for most busy people, picking stocks is time-consuming and risky. Index funds are safer, easier, and historically more reliable. Another powerful principle is pay yourself first. This means investing before spending. As soon as you receive your income, a portion goes directly to your investment account automatically. This creates discipline and guarantees growth. Also, avoid lifestyle inflation. As your income increases, don't immediately increase your spending. Instead, increase your monthly investment contribution. Over time, a higher contribution dramatically accelerates wealth. Now let's talk about mindset. Wealth building is a marathon, not a sprint. If you stay consistent, ignore short-term noise, and keep investing, your future self will thank you. Patience and discipline are your biggest advantages. So here is your step-by-step action plan. Number 1. Open an investment account. Number 2. Invest in a broad market index fund or ETF. Number 3. Set up automatic monthly contributions. Number 4. Avoid checking the market too often. Number 5. Stay consistent for years. You can do this in less than 20 minutes a month. Even if you start small, what matters is starting. Every month you invest is one step closer to financial independence. To summarize, you don't need to be an expert. You don't need to time the market. You don't need to spend hours studying charts. All you need is a simple plan and consistency. Keep investing. Let compounding do the heavy lifting. And your money will grow while you're busy living your life. Thank you for watching. If you found this helpful, make sure to like, subscribe, and share this video with someone who needs it. See you in the next one.